Hi guys, hope you're all having a great day. For today's video, I want to discuss 3 of my favorite Vanguard ETF funds that I see as extremely reliable and stable long-term funds that can act as foundational funds for any great portfolio. These are extremely diversified funds across many different sectors and geographical areas that will expose you to certain sector valuation upturns and cushion any sector-specific blows. If you haven't already, please go hit that subscribe button. I would really appreciate it. I'm going to be doing a lot of videos like this, going over lots of high growth investment stocks, lots of EV stocks, tech stocks. You don't want to miss any of that. So go hit the subscribe. I'd really appreciate it. And without further ado, let's get right into it. Okay, so a quick refresher on what an ETF actually is. An ETF is an exchange traded fund, which trades like any other stock or bond on major exchanges. They're a collection of different stocks and bonds in different allocations. When you purchase an ETF, you are potentially becoming exposed to tens, hundreds, if not thousands of different stocks and bonds, all nicely compressed and packaged into one specific fund, generating extreme diversification. It's essentially spreading your eggs into many different baskets. They do come with a management expense ratio, or an MER. For these particular funds that I've chosen, the MER is so low that you really won't even notice it. Okay, so enough explanation, let's get right into it. The first Vanguard ETF I want to talk about is a massive, all-encompassing, that can essentially serve as the basis of any good, well-diversified portfolio. This is a total stock market fund, and in our case, it's specifically the Vanguard Total Stock Market ETF, under ticker symbol VTI. It essentially mimics the US economy, and if we look over time, the US economy is a steadfast powerhouse that has continuously increased at a very stable and reliable rate. I wouldn't want to bet against it in the future. So I really think holding this fund is just a nice stable way to ensure you are receiving some of that equity return from the total US market. I know some people who only hold this fund and allocate a predetermined amount to it every month or every 2 months. These people then reinvest into the fund, exposing themselves to compounding interest over time, really building up their wealth. Okay, so ripping through VTI, we see it's following the CRSP index, the Center for Research in Security Prices US Total Market Index, exposing to nearly every single investable equity holding in the US. If that's somewhat confusing for you, you can just think of it as a fund holding nearly every single investable asset in the US stock market. Zooming out on its return over time, we can see that it's an extremely reliable and stable index, seeing about a 177% increase since inception in 2001. It also provides a relatively nice dividend of around 2.16%. With an accumulation of shares, you can actually receive a very reliable form of passive income in the form of quarterly dividend payments. It has an extremely low expense ratio of 0.03. It very accurately follows its benchmark, and since inception has yielded a 7.21 annual return. A hypothetical $10,000 investment in 2010 would now be worth $36,211. As many other funds are, it is highly allotted to tech stocks, encompassing more than a quarter of its holdings. It is also highly positioned to financials, healthcare, and consumer services. Its 10 largest holdings are all very solid companies, which you are probably aware of, the big FANG stocks, which almost hold a quarter of the fund's total net assets. It holds 3,493 domestic stocks, totaling $860.7 billion in fund total net assets. I really like this stock, and as I said before, it can really serve as the backbone and foundation to any good portfolio. And if you really don't have the time or the desire to invest on your own, it's a really good fund just to put your money into. Don't think about it and reap the rewards over time. Okay, so moving on to number 2. This specific stock comes with a bit more risk than VTI, so I personally have much less of my own portfolio allocated to it, but I think in the coming months and years, and decades even, this specific ETF is going to see a massive increase in valuation because of its growing importance to the US economy and to the individuals residing in the United States. ETF is Vanguard's Healthcare ETF under ticker symbol VHT. As you can probably decipher, this ETF exposes you to the US healthcare sector, a sector in which many investors currently think is severely undervalued and is going to see a greater importance in the coming decades. It holds stocks not only directly correlated to healthcare, but to also the implementation of healthcare, such as technology, equipment, research, and services. Unlike some other sectors, healthcare, and thus this ETF, has seen a V-shaped recovery since the onset of the global health situation, and is right back up to its 52-week highs. Its 10 largest holdings, which hold nearly half of its assets, are massive conglomerate companies such as Johnson & Johnson, United Health Group, Pfizer, Merck, Abbott. These are huge companies, and I think purchasing shares of this ETF really provides great exposure to the healthcare sector. It has 432 holdings totaling $12.6 billion in net assets, and a hypothetical $10,000 investment in 2010 would now be worth $44,750. It has a 10.2 annual return average since inception, which is actually remarkable. However, it comes with a slightly higher but still extremely low expense ratio of 0.10, which would have cost you $236 over the course of 10 years with an initial $10,000 investment. It pays out a slightly lower div yield of 1.28%, however, it's better than nothing. I really do like this ETF, and with the current fierce competition within the healthcare sector, it essentially removes you from all that, exposes you to the sector as a whole, and really ensures that you are going to be exposed to this potential valuation sector increase in the coming decades. All right, the last Vanguard ETF fund I want to talk about is definitely more on the speculative side. However, I'll discuss why I think it's a good time right now to get in on the ground floor. The ETF I am referring to is Vanguard Emerging Markets Stock Index under the ticker symbol VWO. So emerging markets are essentially companies within countries such as China, Brazil, Taiwan, Mexico, countries that have seen recent economic successes and are projected to continue to do so in the coming years. This particular emerging market ETF follows the FTSE or FTSE Emerging Market All Cap China A Inclusion Index. Now, because it's an all-cap index, this does mean that it includes very small cap companies, so the stock is going to see more volatility in comparison to the first two. However, it does hold much more potential for high gains in the future. Again, the same old story of very low expense ratio, 0.10%. Since inception has yielded a somewhat low 5.42% annual average return, which with the recent volatility would have only yielded 13,642. Now, this is a dismal return over the course of 10 years and would have greatly underperformed the general US stock market. However, I think an investment in emerging markets 10 years ago was extremely premature, and I think we are kind of getting into this area where the time is nigh. With the exponential increase of globalization, travel, the internet, technology funds from other countries, I really do think emerging markets have a much better chance of competing with North American and European companies in this day and age. This fund holds a whopping 5,034 stocks encompassing $74.4 billion in net assets. Its 10 largest holdings hold almost a quarter of these assets. Its median market cap is $19 billion, so mainly large cap, and with 42.2% of its market allocation positioned in China. I do see huge potential in emerging markets, and especially in Chinese companies who I think have handled the global health situation much better than many other countries, which may have opened up a door for China. I can see China really gaining leverage over many other countries in their production output and their exporting of goods. So I really do like this fund for that particular reason, and because I see emerging markets in the world of technology companies, internet companies, software companies, really gaining a level playing field with other North American and European competing companies. As I said before, it's more risky than these first two ETFs I've presented, so I wouldn't allocate a large portion of your portfolio to emerging markets. I personally only have about 5% of my total portfolio holdings to this specific fund, just because I do want to be somewhat exposed to these emerging market, hopefully potential sector upturns in the coming future. All right, guys, that's it. Just a quick one today. Wanted to just run over 3 of my favorite Vanguard ETF funds. If you like what you saw, if you found something beneficial, go hit that subscribe button. I really would appreciate it. I'm going to be doing lots of videos like this, going over tech stocks, EV stocks, software companies that I really like. You don't want to miss any of that. So go hit the subscribe button to see all my future content. I really would appreciate it, and I will see you guys next time. Cheers.